from HUL. Meantime, Canara Bank delivered its numbers on Friday evening. Let's get on board the management of the bank. Rakesh Sharma, MD CEO, is joining us right now on the show. Mr. Sharma, you've reported losses in the fourth quarter and overall operating performance has been quite weak. Could you tell us what has led to the weakness in the performance this time?
Okay, so you have to see this in this background. One is, of course, this earlier when this S4 instruction and SDR instructions were there, some of the cases were undergoing that SDR process. Already some of them were, of course, at advanced stage also. But in the meantime, the guidelines came that the S4A and SDR has been cancelled. So normally, as you know, the S4 SDR process is a 6 to 18 months process. So those accounts had to be classified as NPA. And that's why these slippages which have happened during the quarter are 13,200 crores. Out of that, 8,000 is only account of those revised guidelines. And of course, apart from that, there was in some case failure of SDR was also there, and some agriculture NPAs, some slippage has happened. So that way, if you see, other than this, normal slippages are in the same range, 2,000 to 2,500 crore. So, but we thought, okay, let us clean everything. So that's why number one, the slippages are high. Number two, why this loss is there? This you have to see in this background. That one, if you see last year, as on 31st March 17, the bond yields were 6.66%. And as on 31st March 18, it was 7.40. So as a result, during the current year, there were M2M losses were there. So RBI had given this dispensation that the banks can carry forward these losses during the next 4 quarters. But as a conservative measure, we decided not to carry forward, and entire thing has been provided in the current quarter.
Okay, Mr. Sharma, you did mention that you have provided largely for the for the Feb 2018 RBI circular. So, will we see any further impact in the first half of the new fiscal due to this circular? And what is the kind of provisions that you see towards NCLT cases?
Yeah, good. Actually, I foresee some impact, but impact will be on the positive side, because that whatever negative impact was there, we have already classified all the accounts. As NPA, and provision also we have made adequate provision. That's why my PCR has improved. So I don't carry it forward. Anything is So as on now, 31st March, everything has been provided, everything has been accounted for. Now the impact which I see, once this NCLT cases resolution starts, this already some accounts are already in advanced stage. So by 30th September, my target is that my gross NPA will come down approximately 9.5, and net NPA will be around 5.5. And of course, then during the subsequent quarter also, now I am foreseeing the resolution only, and the slippages will come down quite substantially. There will be normal slippages. Now, no carry forward.
And could you give us a sense of what your needs are in terms of capital requirement for FY19? What is the capital infusion that you see from the government, and the amount you expect to raise from non-core asset sale or from capital markets for that matter?
Okay. So one is that as on 31st March, our capital adequacy has improved from 12.66 to 13.2. So we are quite adequately capitalized. So current year we have already plan approval for raising 4,500, and I think most probably will be raising it first or latest by second quarter. 4,500 crore will be raised. As far as this government is there, of course, it will depend on their plan, how much they provide to us. And that I will not be able to predict it. But of course, during the current year, it will be a better year, and in fact, because we don't have anything carry forward, and PCR and all this provisioning resolution will happen, some write back will also be there. So we are expecting a good profit. So that plowback of profits will also be there. As far as monetization is concerned, for the time being, we have postponed that sale of Canfin Home. But the other 2 subsidiaries are there which are under process, Can Factors, but these are small subsidiaries, Can Factors and Can Computer. So some amount we will bring from those non-monetization of assets also. But that will be in the range of around, and some other non-core assets around 200 to 300 crores. But our effort will be that to maintain capital adequacy at least about 12.5%.
Okay, and finally, Canfin Homes, the stake sale plan was shelved due to valuations. Firstly, will we see Canara Bank exiting completely from the company in FY19? And also, if you could tell us, what's the kind of valuations you're seeking for Canfin?
Now, in fact, because we could not affect, completely complete that deal, because our although the market price which was quoted by the bidder was above the market price, but it was below our expectations. Then we decided to call off that deal. But now, as I had indicated earlier, also we are planning to strengthen our home finance further, and recently we have posted one more whole-time director there, deputy managing director. So now there are 2 whole-time directors. Our now plan is to strengthen it further, and there is a good, the subsidiary is doing well also. So during this current year, we don't have plan to, as of now, no plan to sell it.
Mr. Sharma, thanks a lot for joining us. To